The so-called Emission Trade Scheme, or ETS, is operational in the European Union since 2005 on a more or less experimental level, with emission allowances or certificates handed out free generously by governments. In 2013, the market is supposed to get real. By then, industries are supposed to bid and pay for their allowances. All industries? Well, no. Energy production has been excluded from the start, and now the European Commission has drawn up a list of 164 industrial sectors which are going to benefit from a higher share of free allowances. Why? They are at risk of something called carbon leakage.
Carbon leakage means that manufacturing does not anymore take place here in Europe, but is relocated to outside Europe due to domestic policies. So we are very concerned about this, and that is why we have made proposals how to avoid any carbon leakage here in Europe.
EU member states have approved the Commission's list, anxious to protect their own industries from a competitive disadvantage, especially if the Copenhagen conference does not yield a big international agreement. But the European Parliament, equal legislative partner in this, looks set to ask awkward questions. After all, the benefiting industries account for 77% of all industrial CO2 emissions. The wrong way to tackle carbon leakage, according to the Greens.
The alternative would be what we Greens have been suggesting from the start. When our industries are turning towards innovation and they have to invest more, making production more expensive overall, then we have to use protective measures and climate tariffs to counter any imbalance.
Parliament's Environment Committee will discuss the list and vote on possible objections to it this week in Brussels.